Okay, welcome everybody to our Guide to FBT in 2023 webinar. I'm joined today by Gareth Stead. For those of you who don't know us, we're both business services managers here at Quantum Advisory. At Quantum Advisory, we are accountants and advisors that help you define what your next level of business is and then achieve it. So we primarily work with companies in construction, manufacturing and distribution. We're a team of 26. We've got offices in Penrith, Wollongong and Lithgow, but we do service clients all over Australia. So today we're going to be talking about, first of all, what is FBT? What exactly is it? Why are we doing all of this? What changes there are this year? What exemptions and opportunities are available to businesses that you should all be aware of? And what we need to do to make sure we're minimising risk. So Gareth, do you want to jump in here with what is FBT?
Hello, everyone. Yeah, so FBT is one of those taxes that nobody really likes.
Which ones do they like, Gareth?
Yeah, so to answer that question, probably the first thing would be to have a quick look at where FBT fits into the whole tax system. So according to the APS, FBT only accounts for 0.7% of the tax revenue in Australia. And naturally, a range of stakeholders have raised concerns as to the purpose of FBT and the cost of complying with it. So the question is, why does FBT even exist? Why can't we just get rid of it? The answer to that is that the FBT is more of a disincentive for employees that would seek to pay employees in other means other than wages. So prior to FBT being brought in 1986, it was quite common for businesses paying employees that they would pay them via other means other than wages. For example, they might pay their school fees, provide vehicles, or they might provide other non-monetary goods and services. And so FBT is charged at the top marginal tax rate plus Medicare Levy. And so its primary purpose is actually just to discourage employers from paying employees in this way. So that's why the tax revenue from FBT is so low.
Yeah, so most businesses are actually not even paying FBT, and that's why there's no revenue there. But it's designed to force people to structure their affairs in a way that everyone's getting taxed, in a way that the ATO can live with. So what are the common fringe benefits that we see? The obvious first one is motor vehicles. That's businesses providing vehicles to their employees that their employees can use both for business and personal use. Expense benefits. So anything where a business has paid a private expense on behalf of an employee. We see quite a bit of private health insurance premiums and other expenses as well. Loans and debt waivers. So this is one that sometimes catches people out when people haven't realised they have provided a benefit. But if you've loaned an employee money and the interest rate on that loan is not at least what they call the FBT benchmark rate, which this year is about 4.5%. If you're not charging that benchmark rate, the ATO would recognise that you've provided a benefit to the employee in the form of a discounted loan. It's clearly in connection with their employment and therefore would need that benefit, the interest they've saved would need to be taxed. And if you've written off the debt altogether, of course, that's a benefit too. Employee entertainment. So this is providing entertainment to your employees. That could take many forms, meals out, tickets to events, holidays, lots of things can fall into that bucket. And then there's also this sort of catch-all that the ATO calls residual benefits. So it's any benefit you provided that doesn't fit neatly into another category. The ATO, if you've provided a benefit to an employee that's clearly as part of their employment and is not being taxed under income tax, the ATO would call that a residual benefit and expect you to calculate FBT accordingly. So coming on to what's new in 2023. And the big one that everyone's talking about, of course, is the electric vehicle FBT exemption, which was one of the key policies of the not so new anymore federal government. So Gareth, do you want to take us through that?
Yeah, so as Pat said, the Labor government's rolled out this new FBT exemption, and it's actually a blanket exemption. So subject to a few limitations, but essentially what that means is that this exemption applies to all electric vehicles. So we're talking about battery electric vehicles and plug-in hybrids, as well as hydrogen fuel cell, although we don't see too many of hydrogen fuel cell vehicles in Australia. It's important to note it doesn't apply to ordinary hybrids. The key thing is it has to be able to be plugged in. And the biggest benefit with this exemption is that all travel, private and business, becomes completely FBT free. This also applies to novated leases. So even in most cases, novated leases are primarily for private use of the vehicle. So even with those, it's entirely FBT free. So quite a big incentive there. As we said, there are a few limitations and points to note. So the first one is that the vehicle has to have been held after the 1st of July. So even though the legislation was brought into law in December last year, I think it was, it still applies back to the 1st of July 2022. The other big caveat is the price. So obviously electric vehicles are pretty expensive compared to petrol. So if you're thinking of upgrading to a Volvo XC90 or something like that, you'd probably be out of luck there, but that would still cover a lot of smaller cars. It's not available to sole traders or partners in a partnership. So you have to be either in a company or a trust to make use of this. And as we said before, it is available for salary packaging or novated leases. And it only applies to vehicles less than a tonne and for fewer than 9 passengers. So it won't apply to, for example, a traditional electric ute. It only applies to passenger vehicles.
But of course, I guess anything that's over 1 tonne and carries more than 9 passengers is not a motor vehicle for FBT purposes and would have a whole different set of provisions anyway that would likely see you not paying much fringe benefits tax. So another big change this year is, well, it's sort of a change and sort of just a lot of confusion around commercial car parking benefits. So first I might just start by going through what is a commercial car parking benefit, and then we'll touch on what's changed this year. So a car parking benefit arises when an employee or an associate employee parks a car on a business premises, and they're parking it there because that's where they work. That's their principal place of employment, and it's been provided to them by their employer. It applies when a commercial parking station is located within a 1 kilometre radius of where the car is parked. And at that commercial parking station, the lowest fee for all-day parking is more than $9.72 for the 2023 year. And on that day, the car is used to travel between the employee's home and primary place of employment. So they've used a lot of words, but essentially what we're saying is you've parked your car at your employer's place of business where you work. You've done that after driving there from your house or from wherever you were before that privately, and that within a kilometre of your employer's address, there's a commercial parking station which charges more than $9.72. And the point of that is to say that if you're working somewhere where it's quite expensive to park and parking is at a premium, then by providing on-site parking to your employees, you're actually providing a benefit to them. They're getting free parking when other people have to pay. So traditionally, the ATO has always held the view that car parking facilities with a primary purpose other than providing all-day parking are not included in the definition of commercial parking stations. So if you think about Westfield, if you've got a Westfield across the road from you, like we do here at the Penrith office, where it would cost far more than $9.72 to park for the whole day, traditionally the ATO would say that pricing of, free for the first 2 hours, $5 after that, but then, $80 all day, that's designed to stop people from parking there all day. It's not really a commercial option to park there all day, and therefore we'll exclude that as a commercial parking station. More recently, the ATO came out with this new definition: car parking facilities with a primary purpose other than providing all-day parking that usually charge penalty rates significantly higher than the rates chargeable for all-day parking can still be part of the definition of commercial parking stations. So essentially all they've done is said that previously they would view that, if you've got a Westfield or a hotel across the road from you that has exorbitant parking rates for all day to stop commuters from using them, that's not what this is trying to get at. Whereas they're now saying we're going to include that as a commercial parking station. Since then, of course, when the ATO said that, you can imagine there was some uproar from within the industry about how unfair that would be, and about the fact that such a substantial definition could change without any actual legislation changing. It had changed as a result of some cases that had gone to the High Court. So when that happened, the Morrison government came out and said, we understood that this is not how everyone understood it. This is not how the government ever intended it. And therefore, the government was going to consult with affected stakeholders and apply a new definition from the 1st of April, which is this current FBT year that we're in. However, then obviously we had a change of government around that time, and the current government hasn't done anything in this space. So as things stand, the latest government position is that they're going to consult and bring out a new definition. But obviously we've had a change of government. The ATO has issued its guidance, which says that shopping centres and hotels are no longer exempt from the definition of commercial parking stations. So we're left in this situation of, I'll just go back a slide, Gareth, we're not quite up to that one. Left in this situation of not knowing exactly what the government position is. So our advice to people is that for our clients, all we need you to do is just tell us if this situation applies. We'll do an assessment of the likelihood of the ATO applying this definition to your exact situation. And it's going to be, you have to look at factors around exactly what kind of parking station you're next to and what they're charging. And we're going to hope that we get some government guidance soon that actually gives us a firm direction. But this is just to be aware that there's a whole lot of bureaucracy here, and we're really not sure of what the definition is in the industry. But we're hoping to get guidance soon. But until then, we all need to make sure we're assessing ourselves against the rules as they currently stand. Having said all of that, one good thing here is that there is an exemption for small businesses. So small business are exempt from paying FBT on car parking benefits as long as the parking is not in a commercial car park, so as long as it's at your premises. And for the last FBT year, your gross income was less than 10 million and your aggregate income, which is the income from all the entities in your group or associated with you, was less than 50 million. So as long as you're a genuine small business under that definition, you can disregard all the rules around car parking and you can let your staff park on site. So going through to exemptions and opportunities, Gareth, you want to take us through the headline ones here?
Yeah, so as Pat said, there are a few exemptions or caveats to where FBT applies, and the biggest one, the one we're most familiar with, would be motor vehicle exemptions. So we'll run through that in a bit more detail. There's what we call minor benefit exemptions, other deductible rule, meal exemption, and the one which Pat's already touched on, which is the small business car park exemption. So on the motor vehicle exemptions, essentially if a vehicle is classified as commercial, there are significant concessions in relation to FBT. So the main one is that it's either a panel van, a ute, or other commercial vehicle. And that obviously includes trucks. The other rule around that, though, is that the employee's private use of those commercial vehicles has to be limited to travel between home and work, and or travel that's incidental to travel in the course of duties of employment. So in other words, if you had to drop something off to the post office that was personal on the way home from work, that would be fine. And it also has to be minor, infrequent, and irregular. So if you went on a bit of a holiday, that certainly wouldn't be covered under those rules. So we're going to actually launch a poll here, and everyone should have that on their screen now. So if you could just pick which vehicles you think would be exempt on that basis. We'll give everyone 20 seconds or so.
That's generous. What kind of view is that in the bottom corner, Gareth?
Looks like a Mini Cooper.
Didn't know that existed.
something like that. Right, I'll give everyone a couple more seconds. Did you want to wrap that up there, Dean? Cool. So most people picked option 1, which is correct. Sorry, let's go to the next slide. And most people also picked option 3, which is also correct. 45% picked option 2. Now that's a bit of an interesting one. So while the vehicle itself is a commercial vehicle, you can see that this guy's got some camping gear on the back.
Can we pull the poll result down, Gareth, so we can actually see the image again?
Oh, sorry.
Yeah, that's better. Yeah.
Yeah, sorry, so option 2's got some camping gear on the back. So there's nothing in the law that says you can't have camping gear in the back of your ute. However, common sense says that if you're going camping, you're probably going to be breaching some of those other rules around minor and infrequent use. So it depends, essentially. And option 4, so that one there does not have a carrying capacity of a ton. So essentially that's ruled out, even though it has a ute bed and could theoretically carry tools and materials, that would not be eligible for the exemption.
Couldn't carry enough tools and materials.
Yeah.
Yeah. So how can we minimise FBT on cars in business use? So if the motor vehicle exemption doesn't apply, if you've got a vehicle that is obviously a car, is not, clearly isn't a ute, then you've got a couple of different ways to deal with FBT. So the two main, I'll try not to get too technical and boring here for the accountants, we all love this, but there's two main ways of dealing with FBT for motor vehicles on how to calculate the benefit that you provided. The first method is called the statutory formula. So this is the simplest way with the lowest compliance requirement. Basically all you're doing is taking the base value of the car, which is the car's original cost, including GST, and multiplying that by 20%. And saying that's the benefit that's been provided. So if the car cost 100 grand and using the statutory formula, the benefit provided to the employee is calculated at $20,000 per year. That is just an arbitrary formula that you're trying to estimate what is a reasonable benefit that will have been provided. If you wanted to be, the other option available is the operating cost method. So this method, we calculate the actual running cost of the car, the deemed depreciation interest. So depreciation and interest calculated on an ATO formula rather than the actual depreciation interest. And that gives us the total value of the car that's been provided to the employee. We're then able to apply a logbook percentage. So if a logbook has been kept for 12 weeks to establish the pattern of use, and that logbook has established that the business use of the car is, for example, 50%, then only 50% of that total of running costs and deemed depreciation interest would be a benefit. So we would always recommend, if you're providing a car to an employee, it should be a condition that employee keeps a logbook for 12 weeks to establish which method is going to work out better for you. As a rule of thumb, if there's more than 40% business use, it's generally going to be better to use the operating cost method. But of course, it does depend on the value of the vehicle. So it's important to keep a logbook, to provide the percentage, and then leave it to your accountant to work out which method is going to give you the lowest calculated benefit so that you can go with that benefit. But if you don't keep the logbook, you don't have a choice. You have to use the statutory method, and potentially you're paying more FBT than you have to. Moving on now to the minor benefits exemption. So a fringe benefit can be disregarded for fringe benefits tax purposes if it's minor and infrequent. So first, minor, the definition of minor is that it has a value less than $300. And it is important it's less than $300, but it has been cases where the ATO has won in court when an employer has provided a $300 gift card on the basis that it's clearly not worth less than $300. So if you're doing gift cards or anything else of a very specific value, make sure it is $299 maximum value. So mine is fairly easy to establish. It's either worth more than $300 or it isn't. The more difficult criteria is infrequent. This has a lot more grey area. Does depend on each case. 48 taxi trips in a year. That was a case that went through a couple of years ago, were decided to be infrequent because they weren't regular. So infrequent is looking at both how often and is it on a schedule. So if you were to take out your team out to a lunch with alcohol worth less than $300 12 times a year, as long as that was 12 random times, that'd be fine. That's minor and infrequent. If you did it once a month on the third Friday of the month, you'll find that's not infrequent. That's clearly a regular benefit that's part of the employment arrangement and therefore would fall foul of this. So to have the benefit disregarded, it has to be both minor and infrequent. And infrequent is talking both to regularity and frequency. So I've got a bit of an example here on the next page. So first example here is Kate sends chocolates and flowers to Jane to congratulate her on the birth of the daughter. The chocolates and flowers have a taxable value of $105. And then the next example is, we're going to decide that one first. So yep, we think that one is clearly a minor and infrequent fringe benefit. It's happened only once and the value is clearly a minor value. Second example here is every Friday, Angela takes two employees to a local hotel for lunch. The lunch for employees usually consists of a main course and a couple of drinks and costs an average $45. So it's well under the minor value threshold of $300. But like we said, it's going to fall foul of the infrequent because it's clearly happening frequently. Another key exemption to be aware of is work-related exemptions. So there's a couple of options, a couple of different things here. First of all, anything that could be deductible to an employee if the employee purchased it themselves falls under what's called the otherwise deductible rule. So there is no benefit, for example, if you're a builder and you buy your employee a drill, as you can see on the screen, there's no benefit been provided because you've bought the drill and claimed a tax deduction. Alternatively, you could have given him a gross payment of the same value. He would have bought the drill and got a tax deduction. So nobody got a tax benefit by having the employer buy it for the employee, but obviously there's some benefit for the employee in that. So anything that would be deductible if your employee bought it, you can buy it for your employee without paying fringe benefits tax. Similar but slightly different is your portable electronic devices. So this is even more generous when it comes to portable electronic devices. Any portable electronic device that an employee is using at least mostly for business can be purchased by the employer with no fringe benefits tax. So instead of, even though it's not fully otherwise deductible, if an employee has a laptop that they're going to use 51% of the time for business use, the employer can buy that, claim a tax deduction and pay no FBT because it's mostly for business use and it's a portable electronic device. So that's another one to be aware of. It can sometimes be quite lucrative for employees to salary sacrifice. If they're going to buy a laptop anyway and it's going to cost them a couple of grand, they might as well salary sacrifice their salary, get their employer to buy it and get a tax deduction for the full amount. It's essentially instead of only getting a tax deduction for the business use portion. And then Gareth, do you want to take us through the meal entertainment exemptions?
Yeah, so the next one is obviously providing meal and entertainment to employees. So broadly, food and drink provided to employees on a working day and on the employer's premises would be FBT free. However, if that was, off-site and it included alcohol and other entertainment, that would clearly fall foul of this. And actually one of the big things is the alcohol piece. So if you did provide a meal on site or lunch and you provided beers with that meal, the ATO would look on that as being of entertainment in character. And you actually, by doing that, you also risk tainting the character of the other deductions as well, so that the ATO might consider that whole meal to be entertainment.
Okay, so we're going to run through a couple of examples of things we've just spoken about to see how they can be applied in reality. So hopefully everyone can see this. This is a comparison of whether a question we get quite often actually from owners and directors of businesses is, Pat, I'm buying a car. It's really for my spouse. There's almost no business use. There might be a little bit of business use. but it's primarily a private purchase. Am I better off buying that in the business, or should I just buy that personally? So we've done a bit of a comparison here as to what the cost looks like of doing it each way, given the way that FBT works. So the assumption here is we're buying a motor vehicle worth $50,000. So it's got an annual finance payment of $11,340, and we've assumed that the running costs are $10,000. It's 20% business use, so not much. It's an individual tax rate of 39%. So that's an average person on a decent income, over 120,000 but less than 180,000 is paying tax at 39%, and the company has access to the tax rate of 25%. So the first example there is, let's just say the employee goes and buys the vehicle themselves. So their costs are $10,000 a year, $11,340 of repayments. They can claim a tax deduction for their 20% of their costs that are related to business use. And you can see the calculation down there at the bottom. There's depreciation, running costs, gives us a tax deduction of $4,500 at their tax rate of 39%. That comes to a cash benefit of $1,755. So the total cash cost to the employee, if they own it themselves, is $19,585. You'll see there, though, the total cash cost to the business we've calculated as $32,106, because for that director or owner of the business to have $19,585 after tax, they need to earn $32,106 before tax. So the business needs to pay that out to them. If the business was to own the car directly, their running costs less GST, their annual repayments, you can see there. So running costs less GST, $9,091. The repayments are obviously the same. They're going to have an FBT contribution on that vehicle. And we've calculated that using the statutory formula, which is best in this case. The tax on the FBT contribution is going to be $7,991. However, the employer is also going to claim a full tax deduction for all the running costs. So 100% of the depreciation, 100% of the running costs gives them a tax deduction of $21,000. And at 25% tax rate, that's a cash benefit of $5,397. So the total cash cost to the business of owning it directly is $23,000 versus a total cash cost to the business of owning it individually of $32,000. So in most cases, you'll find that it's going to be better off buying it in the business if you're buying it for a close associate of the business. But we can help you by running this calculation on any scenario you like, looking at different options. But other than when you've got especially high values or especially low business use percentages, you'll find that it's going to be better this way. So next example here is taking advantage of staff lunches. This is a smaller one, but it's still something to be aware of. So in this scenario, we've got an employee we want to buy lunch for. We're assuming we're buying lunch for $8 a day. Might need to update that with inflation where it is at the moment, but the example holds true. So lunch is $8 a day for 45 weeks. The cost of lunch is $1,800. So starting on the right-hand column for the employer, if the employer is to buy the lunch, it costs him or her $1,800. They then claim GST of $163 back off that. And they get a tax deduction. So there's a cash benefit of $638 for the tax deduction. So the total employer after tax cost of just providing lunches directly is $998. There is no FBT because it's being provided on the premises of the business without alcohol during work days. If the employer says, no, let's just pay the employees and they can buy their own lunch. So first they have to pay them $2,748 before tax for them to have $1,800 after tax, assuming an average tax rate. When we're paying wages of $2,748, we've also got on costs at 17% of $467. That's for superannuation, payroll tax, workers' comp. But we do get a bigger tax deduction because we paid out a lot more of $1,254. So the after-tax cost to the employer is $1,961. So you can see that there's a big cash saving for if the employer buys lunch directly of $963. And the obvious question here is, well, why are we buying our employees lunch at all? That's really not our cost, and that's a valid point. I think the point of this is, though, that to demonstrate that by providing benefits pre-tax that have to be paid for post-tax by your employees, you can provide the employee a benefit to them that's really worth $2,748 to them, and it's only cost the business $998. So you've multiplied your ability to reward your employees without it actually costing you, but has the exact same impact on them. So I think that's why this is a great idea, and could work in a lot of businesses to provide better employee amenity at a much reduced cost.
So minimising risk. So there are a few things that we can do to avoid attracting the ATO's attention in this area. And specifically around motor vehicles, there are a few things that the ATO looks at in conjunction with each other to determine whether you're at risk of being in breach. So one of the things they look at is whether motor vehicle or entertainment expenses are being claimed. So they look at the labels in your tax return. And then they also look at whether an FBT return has been lodged. And then as well as that, they also look at whether you've paid employee contributions. So that's why one of the things we do is we often lodge $0 FBT tax returns. And that's because by doing that, we're actually demonstrating to the ATO that we are actually looking at FBT and taking that into consideration. So if you're claiming motor vehicle expenses but aren't lodging that FBT return, chances are that the ATO might have a closer look at what you're doing. The other one is claiming home office expenses. So as we all know, with anything in the tax system, it's important to keep documentation, and it holds true for documenting home office expenses as well. So one way to do that obviously is to have a diary or a logbook. In fact, that's an expectation, so that if you were ever audited, you'd be able to have those supporting documents to substantiate your claim. Alternative to that, an employee could actually receive an allowance. And then in that sense, the employee is responsible for the substantiation rather than the employer. An employee can currently utilise two different methods to claim home office expenses. One of those is it's a cents per hour rate. So essentially, per hour worked at home, you can claim a deduction. Of course, keeping a diary for using that method is very important. And the other method is claiming cost directly. So if you spend X dollars on a particular service or product, you can actually claim that depending on what it is.
So next steps from here, our FBT form that all of our clients will be familiar with, that will be going out very soon. The idea in this form is that it'll be sent to each business, and it's just a checklist of questions so that you can input all the information to help us determine whether there's any benefits we need to address through your FBT returns. So that'll be coming out soon, and we'll go from there. Obviously, we're heading into FBT time now with all the returns due over the next couple of months. Also wanted to mention today that we've got another webinar coming up next month, which is our tax time webinar, all about end of financial year tax planning strategies, some things that have changed this year, and I guess things to be aware of before 30 June. So that's on the 17th of May, and I think there's somehow going to be a way to automatically register in the survey that follows this webinar. So everyone can register for that one while you're here today. Also worth mentioning that, you'll probably get a call from whoever you work with here at Quantum over the next couple of months to do your individual tax planning sessions. And I think that it's really important to take advantage of those opportunities to sit down with your advisor and make sure you're aware of what there is available to you. So might jump on over now to Q&A. Gareth, I can't see the questions, so you'll have to tell me if any have come through.
Yep, so we've got a few here. Okay. So the question is, what about Christmas parties and or gifts based on frequency?
Yes, so Christmas parties is an interesting one. There's a specific carve out for Christmas parties, and it does come back to the minor and infrequent. So as long as it's less than $300 per person, and clearly in the course of business. So I think the key point there is to ensure that you've got as much detail and records as you can on that. Worth noting that when you do use the minor and infrequent benefit exemption, you don't get an income tax deduction. So if you're not paying FBT on it, you're not getting an income tax deduction either. So it's much better off for the business to not pay FBT and miss out on the deduction. But it's worth noting that as well.
Very good. The next one is, the question is, my understanding is that a dual cab ute with passenger seating in the rear must be assessed depending on their carrying capacity. So that's actually a really good question. So most of the utes in Australia are actually designed with FBT in mind, in the sense that they are in the main all have a carrying capacity of over 1 tonne and fit in with the FBT rules. Obviously, that example we showed you of that Mini, that's probably a bit of an exception, but for the most part, all of those utes automatically fall under that category.
But you still do have to assess the purpose, because, like we said, utes are exempt from FBT so long as the personal use of those utes is incidental to the business use, and therefore, if it's clearly a passenger vehicle, you're going to have some trouble potentially if the ATO looks at that. But if you can have a dual cab ute, as long as it's got a carrying capacity and its main purpose is for work, it'll still be exempt.
Good. We've got another one here. If an employer is given a commercial vehicle, is there any benefit in keeping a logbook?
Yeah, well, that sort of goes to the point I just made, I guess, that yes, there could be. If they're given a commercial vehicle, but we expect that there's going to be more than incidental personal use, yes, you should keep a logbook, because you should actually be not claiming the exemption on the basis that it's not meeting the conditions of the exemption, and therefore just be treated like any other motor vehicle fringe benefit. However, if you're expecting that the non-work use will just be incidental, then no, there's no need to have a logbook. The logbook actually is just to establish the business use percentage. So it's kept for 12 weeks, and we work out that over that 12 weeks, 72% of our kilometres were for work, and the rest is personal, and then we apply that percentage over the rest of the year. So if we're expecting that it's 99% work, then no, there's no need for a logbook.
Good. The next question is, does FBT apply for cars parked in a permanent commercial car park?
A permanent commercial car park?
Yeah, so I guess if the car is actually parked in the Westfield, to use that example.
I wonder if, I'm trying to think what that question would mean. Is the question potentially really getting at, does FBT apply if the car stays at work? I guess I can't paraphrase the person's question, but I think that probably is maybe what we're getting at there. A fringe benefit applies for a motor vehicle for any day where the motor vehicle is available for private use. The ATO is quite clear that if a car is parked at an employer's address and at a business premises and the keys are inside or with the employer in their control, therefore the vehicle is not available for private use on that day. So you can actually reduce the number of days during the year that the vehicle is available for private use, which changes those calculations. So if you're going on holidays for 6 weeks overseas and it's a work car and there's room for it, it might make sense to leave the car at work. So you can say that, for those 6 weeks, it was not available for private use. When there's cars that are owned by the business and are kept at work and are essentially pool cars, there can still be a fringe benefit being provided if the person who's driving on any given day does more than incidental personal travel. So it's not, regularly their car, but it is available for them for private use. There is still a benefit there, and in that situation, the employer would need to pay fringe benefits tax on the benefit being provided.
Okay. We have another one. If FBT is exempt on EVs at 84K now, will it change going forward? I think probably the answer to that one is most of these limits do change over time. Most often they change with inflation. So chances are, yes, it will change, but whether it will change in any big way, it's anyone's guess, really.
Yeah, I don't think they're indexed to any other external index. I think it's these rates are updated every year, and that decision comes as a tax ruling from the ATO.
Does FBT apply on GST inclusive or exclusive figures?
FBT ordinarily applies on GST inclusive figures if the business is claiming a GST input tax credit. Yep.
I guess additional to that, does the minor benefits exemption of $300 include GST?
Yes, yeah, it does. Yep, that's a good point. Actually, we probably should have spelled that out. That yes, that $300 is inclusive of GST if GST is included in the benefit. When you actually calculate fringe benefits tax, there's two different gross up rates. So essentially, the ultimate result equalises the fringe benefits tax payable for a business that a business that is registered for GST and a business not registered for GST if they provide the same benefit. So there's no ultimate difference in fringe benefits tax payable. But yes, all fringe benefits tax expenses are calculated on the GST inclusive value.
Good. We've got a few questions coming in here.
Okay.
Does the ute have to have a payload of 1 tonne or carrying capacity of 1 tonne, as most ute brands have a payload of 997 kilos or less to be exempt of GST?
I understand it's carrying capacity of 1 tonne. That's the way the legislation's written. Yep.
Yeah, so I think just on that, I think included in that 1 tonne is the average weight of the people involved. So I think there's some calculations around how many people are in there, and they've got a standard weight per person. So even with one person there, you would take that over the 1 tonne.
Yep.
So it includes the weight of the passengers. Is there any ATO guidance on claiming EV charging at home under a novated lease?
Not that I've seen. We'll have to take that one on notice. That's a good question. Yeah, in terms of claiming as in having that recognised as a business expense and then salary sacrificing it. I've never seen that considered anyway. So we'll find out and answer that one, and we'll make sure we get back to that person.
And last one, if an employee uses a non-commercial car as part of their role and uses that car for private use 15% of the time, how much will FBT be reduced by assuming the employee keeps logbooks for 3 months?
Sorry, read that again to me.
If an employee uses a non-commercial car as part of their role,
yep,
and uses that car for private use 15% of the time,
mm-hmm.
How much will FBT be reduced by the employee keeping logbooks?
Yeah, I mean, it's obviously going to depend on the value of the car and which method works out better. But as a general principle, if there's 85% business use, it's only that 15% private use that is subject to FBT. It's not the rest of the vehicle. So if you're using the operating cost method, you're literally reducing the FBT payable by 85% by keeping a logbook in that scenario. Yeah.
Good. That looks like it's about it.
Okay, no, it's good. It's good time. So thanks, everybody. We'll wrap it up there. And you'll get a survey soon, and make sure you register for that next webinar. Thanks.